Hi you guys, welcome back. My name is Brad. This is the Firefighter's Financial Toolbox. Today we're going to talk about another S&P 500 ETF, and this comes to me from a viewer who sent me this message. This shout out comes from a guy named Ryan Kinney, and I did ask him if it was okay to shout out his name and tell him, and he said yes. He says SPLG is a State Street equivalent low cost to SPY. It's great for us long-term buy and hold investors, and I agree with him. And full disclosure, I was not aware of this particular ETF, so I asked if he would mind if I did a video on it, and he said yes. So we're going to talk about SPLG, the Spider Portfolio S&P 500 ETF. Currently it's trading for around $49 to $50 a share. Now, as an S&P 500 ETF, you guys, obviously it tracks the S&P 500 index. So the first thing to know is all of those ETFs are going to react pretty much the same, within less than 1% in most cases. In most cases, less than 0.25%. But here's one thing I did like about it. So as we said, let's look at the data about SPLG. It's a State Street Global Advisors Fund, just as SPY. And you guys, for those of you who don't know what SPY is, SPY was the very first ETF. It was an S&P 500 ETF, and it's been around since 1993. The one thing about SPY is it has a pretty low expense ratio of 0.09%. The beauty of this fund is it is 0.03%. So you're saving 6 basis points. Now, that's not a lot of money, but over the long term, it can add up. This fund has been around since November of 2005. As we said, expense ratio of 0.03%. Assets under management is $10.3 billion. So this is the difference, you guys. This is a smaller fund. And we'll get into a little later, we'll compare the sizes between SPY and SPLG. For those of you who are new here, in this channel we talk about investing, taxes, retirement, and overall financial well-being. If that's something that interests you guys, do me a favor, hit that subscribe button, drop me a like to help the YouTube algorithm get my videos out to more people, and let's get into this thing. All right, so other competing ETFs in this space obviously would be SPY from the same company, IVV if you're an iShares person, VOO if you are a Vanguard person, or SCHX, which is the Schwab version of the S&P 500, right? Its biggest comparison obviously is SPY because they're both from the same company. And as we said, the difference being 0.03% to 0.09%. So if we look at the assets under management, this is where the big difference is. As I said, SPLG is only $10.3 billion, where SPY is $362 billion in assets under management. You guys, as I said, that is the biggest ETF there is. They both have 507 holdings, and you can see the difference in the trading volume. For SPLG, it's about 117 million as opposed to 28 billion per day. So let's look at the year-to-date. Year-to-date, we can see that we are up about 12.57%, which is pretty awesome, right? If we look at the 1 year, now you guys remember that includes the recovery from the pandemic, it's 40.54%. 3 years, we're looking at 17.74%. 5 years, we're about 17.19%. And 10 years, you guys, we are at 14.36%. So this fund has been on fire, as have all S&P 500 funds. But as we can see, when we compare it to the S&P 500 index, it's always within it's within usually 0.05% of the index. If we're looking at the countries, obviously this is S&P 500. All of the companies are in the United States. If we look at the breakdown of sectors, though, technology is our biggest sector at 33%. Followed by consumer cyclicals at about 15.5%, financials at about 13.75%, Healthcare makes up about a little over 12.5%. Industrials make up about 9.6%. Consumer non-cyclicals is just under 6%. Energy makes up about 2.75%. Utilities, again, same, about 2.6%. Basic materials is about 2.5%. And telecommunications is our smallest sector at about 1.5%. Top 10 holdings: Apple, Microsoft, Amazon, Facebook, Alphabet A, Alphabet C, Berkshire Hathaway, JP Morgan Chase, Tesla, Johnson & Johnson. The companies we know are all what make up the S&P 500, you guys. These are if it follows the index, it's going to be pretty close to what the index holds, within a few, less than 1% usually. All right, so let's talk about comparing SPLG versus SPY. You guys, if we look at the chart here, you can't even tell a difference. They are so close. So let's take a look at the actual numbers. For the 1 month, SPLG is about 0.45% compared to 0.42% for SPY. So 0.03%. At 3 months, it's 0.01%. Year to date, SPLG is beating it a little bit with 12.57 compared to 12.51. Again, 0.06%. Not enough that you're really even going to notice short term. But if we look at the 10-year, we notice that, again, 14.36% as opposed to SPY at 14.39%. So 0.03% over 10 years. That's not enough to make a difference in your portfolio, really, you guys. I think the savings, the cost savings there would be even greater. If we look at the sectors, again, same thing, right? We have technology on SPLG is about 33.02% compared to 33.09%. So all of these are negligible differences, you guys. And the same thing when we look at the top 10 holdings. There isn't one that's more than a couple of hundredths of a percent in difference. In fact, when we look at the makeup, it's 26.45% to 26.47%. So minimal difference, you guys. Do I think this is a good fund? I think all S&P 500 funds are good funds. They're good cornerstones for your portfolio. I think they shouldn't be the only thing in your portfolio, but if you want simplicity, it's a good way. You're investing in the 500 largest companies in the United States. These are companies that are tried and true for the most part. I don't think you're going to go wrong long-term holding this fund over another one. I do like the fact that it's 0.03%, so it's competitive with your VOO, it's competitive with Schwab's SCHX. It's a great option for low cost. I want to reach out. I want to thank Ryan Tinney for his comment and giving me a chance to look into a new fund. You guys, if you have funds that you've heard of, or ETFs or index funds that you want me to review or dig into, put them in the comments. If it's a fund that I haven't done, I'm happy to do it. I like learning this stuff. I like doing the homework to get in there and find a little bit about these different funds, because not all funds work for everybody. And having more information about more ETFs and more index funds to help us on this journey is a good way to make sure we stick to it. Remember, I believe in low cost buy and hold investing. So if I can find an ETF that is low cost, such as SPLG, I don't care if it's trading as much as the other ones, because I'm not somebody who buys and sells his ETFs. I buy them and I hold them long term. So this is a great option for you out there. All right, guys, I hope you got something out of this. If you did, do me a favor, drop me that like. It really helps the algorithm, gets my videos out to more people. If you're not already subscribed, I'm going to ask you one more time, hit that red button, ring the bell. You get notified every time I make a video. I try to make at least once a week. All right, we'll see you. Thanks.